So most of you are probably trying to figure out how to trade futures the correct way. And you're interested in making that shift or switch from Forex or options, but you don't have a solid strategy today or method in which you can actually go about to become profitable, right? And you should know by now there are so many instruments or contracts you can trade within futures. And, like me, I primarily trade the indices, but I also dabble in gold as well. Some people like to trade oil. Some people like to trade currencies and, some of the other commodities. So this depends. But yeah, I mean, in reference to, a great strategy for someone out there that's looking for a way to make a living, this could be game changing for a lot of people out there. It could change your life completely if you understand the simple process or just the method of how to trade futures the correct way, or any market. You have to master and conquer the most important concept to this all, which is market structure. And I'm saying that for a reason, because if you do not understand which direction or able to form a bias of which way to trade, because the charts are not going to lie to you. They're going to show you, the pathway. They're going to show you the movement. They're going to show you a directional move in what you should be trading in. And so like here on my higher range chart, okay, because I trade range-based charts, and some of you may trade time charts or tick or volume. All you have to do is first and foremost just glance at a higher chart. If you ever heard anyone talk about top-down analysis, that is so imperative, it's so important, because you need to start from a higher chart to determine, are we making moves to the upside, basically higher highs and higher lows, or making lower lows and lower highs, pushing lower. Once you figure that out, then it's simply a no-brainer, because you should know which way you need to be trading. If I see the directional move in this market right now, and moving to the upside, I'm going to be looking for pullbacks to key areas of demand, because that's what I trade, supply and demand, to go long. If we're bearish, then we should be making lows, lower highs, lows, lower highs, and breaking structure lower. It's simply put, that's all it is. So anyone out there that's really struggling with the concept of trying to figure out which way to trade, master market structure. That term right there, it means everything, okay? And I did a great video. It's about a 50-minute long video, I believe, or 45-minute long video, breaking down market structure. And it's part of the elite or the ultra elite private community here on this channel here, on my channel. And it's very inexpensive for anyone who wants to join. And you get so much valuable content out of, becoming one of those members or supporters of the group. Okay. And hats off to everyone that supports the channel. I appreciate your support of my efforts as not only as a trader, but as a content creator as well. And I'll leave the link down in the description portion of the video for anyone that wants to become a supporter or a member, to gain access to all the trade breakdown videos. The market structure video, which I'm talking about, is extremely important. And that video playlist, which are highly imperative videos or important videos, I feel that, will aid you in pretty much understanding the strategy and how I trade, okay? But if you watch the trade breakdown videos, you'll learn a lot. So take pen and pad and watch video content, especially for all those that are part of the private community. Watch the video content, all right? I can't stress it enough, because I go into detail about setup after setup after setup, talking about the strategy, and I'll talk more about that towards the end for anyone that wants to join. But basically what you want to do is, with this method or strategy of trading futures, scalping them, is basically understand the directional flow. If we're moving to the upside, then use your higher range chart or time-based chart and start marking up your demand zones. If we're moving to the downside, where we're basically doing this right here, making lows, lower highs, taking out, oops, sorry about that. Actually, let's delete that and get us a new arrow. Sorry about that. And breaking structure lower, breaking low, making lower highs. This high here is lower than that high, and then breaking and making new lows. This low here is lower than this low, and we're constantly making moves to the downside, breaking structure. Then you need to be looking for key pullbacks to areas of supply. Supply and demand. What is that? Demand is aggressive buying. Supply is just aggressive selling. But we have to understand, again, the directional flow of which way to trade. So what I'm going to share with you today and show you is something that could definitely be life-changing for a lot of people out there that are on that path of trying to possibly develop or find a strategy that's going to work for them when it comes to trading futures, okay? I personally am a scalper, so I'm looking at the market every single day, trying to find opportunities in which I can scalp the Nasdaq future, the gold futures, the ES future. All right. Some of you may trade micros. If you're a beginner trader, I recommend starting with the micros and compounding and building an account that way. Some of you are trying to pass those evaluations or challenges. This strategy will work for you. I'm telling you, if you spend the time doing the legwork, back testing and forward testing, because I'm going to tell you right now, not everything is going to work for everyone. I completely understand that. All right. So I'm going to tell you that my biggest concern or reason of not being successful right out the gate, almost 2 years in, was not understanding how to read the market. That is most people's struggle. It's either not understanding how to properly read order flow of the market or being able to read structure of the market. But the second thing is could be their psychology. All right, they have to get that in check as well. Okay, if you're a greedy person or you're very fearful of taking a trade and a mix of other things, then that could start to diminish the opportunities or really stand in your way of being successful. All right, so what we see here, I'm going to show you, for example, a nice setup. The market's moving higher to the upside, okay? This area right here, this was a high. We broke structure here. We came back, made a new high, broke more, pull back, broke more, dip lower. We did take out structure here. So this would look like the market is shifting to the downside, but then we turned back around and we broke more structure back to the upside. So this was a strong retracement with a break back to the upside. This is a major high right here. The market then pulls back to a key area of demand right here. Now, there was multiple areas of demand, and I covered this same type of setup in a video either yesterday or the day before. But either way, there were two setups right here, two demand areas. Demand is aggressive buying that broke this area of structure here, right here as well. Now, we never know, again, like I said before, which one they're actually going to stop at. But this is a demand area, and as well as this one right here. They wanted to, and I'll say this right now, if you notice that where there are multiple areas of demand or supply when you're trading, then I personally prefer to take the latter one at towards the bottom of a swing, okay? And if we're moving lower at the top of a swing with a supply at, because the fact is that this is where the move kind of started gearing up and originating to push higher with aggressive force to the upside or momentum that broke structure right here, okay? So this right here is a demand area. We have this, the most important part to this strategy right here is not, well, I'm not going to say the most important part because there's two parts. I like to see a broken structure. We got it. Okay. 2, I want to see where there's an imbalance or gap resting back at a key area of demand or supply. This is demand because we're breaking structure going to the upside. All right. Pushing higher. This demand area here where there's an imbalance attached to this candle right here that took out that last bearish candle to the downside. It broke above that bearish candle there, that bullish candle did. The next one did not come back and fill back to the zone. So it leaves an imbalance. I talk about this in videos, imbalance or gaps back at the zones. In plenty of videos, guys. Even, if you are someone that is has access to the elite or the ultra elite tiers, which means you're a supporter of that private group, then you hear me talk about it all the time, and I've walked you through it several times in understanding. And it's still, if you're part of that group and you don't quite understand still, you can always send me a DM and feel free to, and I'll answer your questions. But anyways, the market pulled back to this high probability demand zone. That's what makes it high probability, is the fact is it has an imbalance or gap attached to at the zone itself. So this one right here, this is the leg to the upside. The movement started down here, not here. This is just a follow. This is just follow through or continuous move to the upside that aided in this breaker structure. Now, this move, this is where things geared up, and we start to see what the market is basically consolidating right here, and then we got to push to the upside. And that's what we want to see pretty much, is that we see consolidation take place where it's not taking out, say for example, a low right here. It makes a high, higher low, and then starts to try to break structure above here, but it really breaks when it pushes high right here. It's consolidating right here as it's moving back and forth, but it doesn't take out that low right there. Consolidation certainly definitely means that they're getting ready to make a quick move to the upside or downside very quick, and we hope in a situation like this where we had our most recent high that they push above and break structure above here, and then look for a pullback to a key area of demand at the latter portion where that consolidation took place at. The market pulled back to this area right here, and we have aggressive buying to the upside, the imbalance, the breaker structure, all the things that we need to see when it comes to tied to this actual strategy, no matter what market you trade. Okay, if it's the Nasdaq and you're scalping that way, or if it's the ES futures, or the gold futures, it doesn't matter. Okay, when it comes to scalping, we're looking for opportunities to take quick trades either to the upside or to the downside, 20 plus points or so, or more. It's just depending, but we're looking for opportunity to trade in the direction with the movement and the flow of the market because it's making higher highs and higher lows. I'm not interested in going short down here, even though the lower time frame or your lower range chart, which I trade, could be looking bearish coming to the downside. This overall is a bullish market. So please do not be looking to go short on your lower range or lower time frame into a major area of demand on your higher range chart. You're going to get railroaded very quick. The moment you try to go short, thinking that your lower range chart is, bearish, and this is bullish overall in the higher range, the market reacts off of this area of demand right here. It's going to push right to the upside and stop you out every single time. Okay, so that's what I want to share with you. This stuff could be game changing. Now you may be saying, well, you keep referring to the lower range chart as well. Yes, because I'm using top down analysis. I'm not taking my trades from my higher range 120 range chart. I'm marking my first chart up and based on the direction of the movement of the market from a higher range. This is the higher range chart, 120 range demand zone. Then I would move down to my lower range chart. This is that area. I'm going to show you right quick. I'll just bring one of these lines down to this demand zone. You'll see it here on my 24 range. There we are. We're in that area there off the 120 range, higher range chart. And when the market taps that higher range zone, then what I'm looking for is to go long in the direction of the higher range chart. So then what I do is I'll look to see, okay, are we having a directional shift on the lower range chart where we're getting breaks of structure higher, meaning push up, pull back. See, this is even a bit of consolidation right here. It makes a low, pushes up, comes back, pushes up again, comes back. We're not breaking that low. But what we're doing is we're breaking structure higher, taking out structure here, above here, pushing up, pulling back, taking out more structure. So this is where I will look for a key back to a key area of, say, for example, demand on my lower range chart to go to move to the upside with the direction because we're long, we're bullish on the higher range chart. So like right here, this could be an opportunity right here because these are like equal lows resting right here at the bottom here, and the market didn't break below this low. So this would be like a liquidity a liquidity sweep below these lows right here, and then the market reacts. So this is really not playing off this area of demand. But when it did was it came back, grabbed liquidity below these lows here, pushed to the upside, created this area of demand, but it didn't come back to it. So then we wait for another area of demand to take the trade going back to the upside because we're bullish overall on the higher range chart. Pushes up, pulls back, creates an area of demand right here, aggressive buying. We have a imbalance resting on this candle here because that third candle didn't come back and close the gap back down to the top end of this zone here. It comes back to the demand zone right here. We're also, again, like I said, look very bullish on the higher range chart. Look, see this? Green candle, that's a lot of bullish momentum to the upside. So I'm looking to go long in the direction there. Pull back to this key area of demand. Again, we tapped off a higher range demand. We're breaking structure higher. We got pull back to a clean area of demand with a gap attached to it. Go long. Okay, that's what I'm doing each and every day. And this could be, like I said, game changing to a lot of you out there. It could change your life. Just scalping. And again, you could trade the micros starting off to build your account up over time. There are plenty of people that trade the micros, and some of them trading 2 contracts, some of them trading 5 contracts, some of them trading 10 contracts, whatever it is. But you can simply make a decent living each and every day trading these markets. Now, if you want to become, again, like I said, an elite member to receive all that additional private community content where I'm really breaking down the cornerstone to how I actually trade using this strategy, again, the link is down in the description portion of the video. It's right below the Discord link. The Discord is free if you want to join. It's titled Ultra Elite Supporter. Once you click that link, you will see 3 tiers that will pop up. Choose either to become an elite member to receive the trade breakdowns, the video playlist, and a great detailed video covering market structure, okay? Or you could choose to become an ultra elite member where you receive everything that I just mentioned, plus my live recorded trading sessions and market recap videos, okay? So the choice is yours. It's very inexpensive, but the link is down in the description portion of the video. In those trade breakdown videos, which are tons of videos there for all those that want to become an elite member or an ultra elite member, that's where I go into detail about the strategy. So what I do is there are setups that I trade each and every day, and I post them over in the Discord community on the trading floor. I'll go back and I will break them down for the elite and the ultra elite members, okay? So in those detailed videos, those trade breakdowns, that's where I'm going in detail about the setup, about structure, price action, stop loss placement, profit target areas, things of that nature, and talking to you about why I took that trade. I break it down so you can grasp and understand it and why I take it. All right. But the choice is yours. Like I said, the link is down in the description portion of the video. Now, if you haven't subscribed to the channel already, what are you waiting for? Please take the time to go ahead and sub right now. Click the bell as soon as you do so to turn your post notifications on so that you do not miss any of the uploaded videos that I drop here on the channel. And last but not least, if you haven't also smack that thumbs up button or that like button, please do so right now. Click it right now before you get off. I greatly appreciate it. It helps the channel out. It helps to get the video content out to where it needs to go with people searching for this relative content, okay? Take care. I'll see everyone in the next one, and that's going to be it. We got 2 more trading days in a week for anyone out there who's actually trading and part of the community. So let's, try our best to kind of for all those that are profitable to remain green. Like I always say, the goal is to be green every single day, at least try to, or break even. Don't be red, guys. You can definitely be on a sailing path, moving to the upside by simply taking 1 to 2 good quality setups a day. That's what will lead you to becoming profitable. Take care.